Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Phil Mackintosh, Chief Economist at Nasdaq, to discuss how the markets are digesting the slew of news that's out there. And Phil, it really feels like the market is certainly in a wait and see mode, and it's not simply stocks, it's other asset classes as well, and we'll get to that. But of course, you know, the news this morning is with U.S. jobless claims.
Yeah, and I think the big news with the jobless claims is that we're seeing a slowdown, aren't we, in the rate of improvement, and still record numbers, really. The typical number of jobless claims per week was 200,000 or 300,000. We're pretty close to 1 million. So basically, the improvement in the jobless situation has slowed right down, which speaks to the headwinds that we've been talking about, and just doesn't speak well to the economy recovering as quickly as people had hoped, really.
Right, and of course that we see the EU COVID-19 spike. This was kind of like phase one for us last time, from Asia to Europe. Are we possibly going to get this next wave in the States over the next couple of weeks? So, clearly markets are going to be worried about that.
Yeah, and looking at the caseload in Europe, I mean, obviously the sell-off the last few days has been mostly about the fact that Europe is seeing a second wave, and they're talking about renewed shutdowns and what that means for their economy and the global economy. But when you put things in perspective, this second wave of Europe, the number of cases per head that they're having is still around half what we're sort of living with here in the US. The European caseloads per head haven't been anywhere near as high as the American per head caseloads since about the end of April. So Europe is reacting much more aggressively to this new spike than America is. It's kind of interesting. I mean, there's obviously a couple of countries where it's worse, in Spain and in France per head. It's much worse than in Italy and the UK and Germany, but at a total level, the European case spike is actually pretty insignificant compared to what we've been living with for months.
Well, Phil, would you say that in the US, we've just learned to live with it better? Does that make any sense?
I mean, I think that's kind of the policy, isn't it? Is to make sure we all get back to work and as much as possible, just deal with the new cases coming. And the reality in Europe is the death rate is very low the second time round. It's starting to tick up, but the hospitalizations have been lower. The death rate is much lower. So, in hindsight, we might all look back and realize that we've overreacted. But when mortality is on the line, it makes all the individuals think twice, doesn't it?
Well, it certainly does. And I would argue also that we just haven't had enough time, research, data, patience to respect the science and understand how this can impact you. You may have recovered, but how has it impacted other systems in your body? How can a vaccine potentially impact people with underlying conditions? And I think that's part of it also. And it's not just stocks that are selling off due to this uncertainty. You're seeing it in a number of other areas.
Yeah, that's true. I mean, the commodities spectrum has been sort of weakening the last few weeks. And remember, we talked a month or so ago about precious metals and gold hitting all-time highs. I mean, the precious metals have actually had a pretty bad month as well. So it's not just stocks that are down this month. There's a little bit of selling coming through the system.
Right. And to wrap up here, we're seeing some money go into TIPS ETFs. You have to put your money somewhere.
Yeah. So about $10 billion has gone into TIPS ETFs in the last 3 months, which is for them a lot of inflows. And TIPS are obviously treasuries that are inflation protected. But that doesn't mean that they're interest rate or inflation risk free. It just means that the coupon that they pay will go up if inflation goes up. The problem is with negative real interest rates right now, everyone's expecting to earn in a risk-free bond less than the rate of inflation. So TIPS are actually gotten pretty expensive.
All right, Phil, great stuff. Thanks for joining us on Trade Talks.
You're welcome, Joe.
And thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.